This is the Jay Pitt Show.
If you're a new agent, you came from a job where you're working maybe 9 to 5, not making a ton, but say you're a few years into being an agent and you're starting to make really good money, say 3, 4, 500,000 a year. What are the first steps you would take, whether that's meeting with certain people to organize your money, know where to put it? How do you handle this new flow of income that's a lot more than you had before? Like, what steps would you take?
This is a great question. And I don't feel like we talk about it enough because we are extremely hyper-focused as an industry on how do we get subsistence, right? How do we pay our bills? How do we find clients? How do we generate revenue? How do we get to success, right? And we don't think very much as an industry about how we manage our money, how we limit expense, how we set ourselves up for success in terms of tax planning, retirement planning, things like that. So, those are a bit more defensive ideas. And we tend to be, because there's no promise of income or revenue at all. If you look at yourself like a business, which is probably the first step, look at yourself as a business. You may be a sole practitioner, but you are a business. You are, outlaying capital in the hopes that you will generate revenue that exceeds the capital outlay. If your expenses exceed your revenue, you're broke, right? And worse, because, now you don't have anything to pay for your personal expenses at home that are pretty constant as well. So yes, I love this. I'm going to go step by step, if that's okay. I think the first thing that any real estate agent should do is you should incorporate an LLC. That's step number one. I would make that LLC a sole proprietor type LLC or a disregarded entity, which is essentially a single member LLC. All the earnings from that LLC will file under your Schedule C on your tax return. You're not going to be an S Corp yet. You're not going to be a C Corp yet. You're just going to be, either a partnership or a sole proprietor type LLC that will file as a disregarded entity on your Schedule C of your tax return. If you don't know what I'm talking about, talk to your accountant. They will help you. It is quite easy. Don't spend a ton of money to incorporate. It's really easy to do. You can do it yourself online with the Secretary of State in your state. There are very simple documents that you can download, articles of organization, operating agreements if you have partners, things like that. You don't even really need an operating agreement if you're a sole proprietor. So if you have a partner or you and your spouse want to be a partner in your real estate business, like totally cool. Pro tip, if you want to get an attorney, talk to a closing attorney that you plan to do business with or are already doing business with, and they'll likely help you for next to nothing. Okay.
Yeah, I would definitely do that.
Yeah. I mean, you can do that or you can do it yourself. Some people are inclined. That's fine. You can legal Zoom it. Like that's easy. It's cheap. But start an LLC. Okay. Second step, go start a bank account under that LLC and capitalize it with a very small deposit just so that the account exists. Order checks, get a debit card so your banking is straight. Okay. Next, get a credit card. It can be in your personal name. It does not have to be in the name of the LLC. Remember, your LLC is going to come up under your personal tax return anyway. But you need a credit card for ease of use. There's going to be expenses that you want to use the credit card for short-term financing, if you will. I don't recommend doing that much of that, but if you need to spend $1,000 on signs and you don't have it in your budget right now, you just need to do it. Okay. But only use that credit card for business expenses only. Okay. Only use that bank account for business expenses and revenue only. Then when you get commission dollars, you deposit 100% of your commission dollars into that bank account. You only pay for business expenses out of that bank account or on that credit card. Okay, so what you've done now is completely siloed your revenue and expense as it relates to your business. If you pay your broker, if you pay your license, if you pay your cell phone bill, your cell phone bill is deductible now. It is a business expense. You need to talk to your accountant. Probably going to take mileage deduction, so you don't want to buy gas on your business because you're going to take a mileage deduction instead. So that's like one thing that you can't really call a business expense. One thing that is also, I'm not going to get into like super deep into tips and tricks and suggestions, but you probably don't want to buy clothes as a business expense. It's an audit trigger, and it's really hard to justify my polo shirt that I also wear playing golf as a business expense.
Yeah.
Okay. So, but LLC, bank account, credit card. Okay. Tell your broker you're going to write the checks to my LLC and you're going to deposit those into, or you're going to have your direct deposit go into your bank account. Those are like 101. Okay. Eventually, what we're going to work towards is getting that LLC reclassified as an S Corp. Okay. And then we'll set up payroll to where we pay you an amount that is equivalent to your home expenses, your personal expenses at home, so that all those can be taken care of and the rest of the money stays in the business, separated from expense creep at home. The more successful you are, the more you're going to want to spend your money. Okay, I get it, but be sober about those decisions. I want you to have to take an extra step to go withdraw money as an owner's draw from the business account because you need to buy a new couch at home. Things that are personal expenses but don't fit in the normal budget. Mm-hmm. The better you are at budgeting, the more sacred your business revenue, your business assets will become. And yeah, we sell houses and we work hard so that we can live a better life. So don't feel bad about spending your money, but be sober about those decisions, right? I don't know about you guys, but the way our household works is I bring it in and Jen spends it. And it's not like that's not even like a joke, like haha, she spends money, right? It's that she takes care of the shopping that takes care of the family. She buys the groceries, she buys the kids' clothes, right? She does the things. Now, I will also recommend that in your personal world that you automate everything you can possibly automate.
Absolutely.
Okay, your LG&E bill, your gas and electric, your water, your I set up automatic minimum payments on my credit card, even though I pay it off every month because I don't want to miss one day and get a late penalty on a credit card payment.
I set up automatic pay the whole thing.
Well, and that's good too. I didn't see that option last time on my credit card, but we pay our credit card off every month. And I have a budget in place that is accurate to the point where there's always enough money in the personal bank account to pay off the personal credit card every month, right? And large expenses require, again, an extra trip, if you will. Not really anymore, but an extra trip, an extra transfer from the business to the personal account, which makes you pay attention, which makes you acknowledge, okay, I'm doing something special, and it doesn't become the rule. Okay, so all of those things are really, really like 101. Later on, we can talk about a SEP account, a retirement account for your business, which will allow you to contribute a ton of money, tax deferred into a retirement account. You can reduce your taxable income by $40,000, $50,000 a year. Think about that. If you're in a 40% tax bracket and you put, $40,000 into a retirement account, you save $16,000 in taxes. So you could net 24 or invest 40.
Yeah, I'm putting close to 40 in a SEP this year.
Well, and again, what you're going to do is that the long-term value of having that money invested in the market that typically gains 5 to 8% per year, conservatively, like better in recent years, but conservatively 5 to 8% a year, when you don't need it and it's not part of your budget, you'll look back in 10 years and you'll be like, wow, how do I have all this money in my retirement account? Those are things to do for sure. I mean, there's others, but those are the most important. The getting to the S Corp level, like graduating to an S Corp is really important as well because it opens up a lot of new tax savings kind of avenues, but you can't get there until you have a reliable stream of income.
Yeah.
Right. If you make $20,000 this month and nothing next month, that's kind of hard because you're going to set up a $7,000-$8,000 a month pay cycle that's coming out every single month. And if you're running your balance low because you have an off quarter, it's going to bust the whole situation. And that's an added expense with the payroll costs and processing and stuff like that. But
how many months? It's kind of arbitrary, but how many months? 6 months built in.
6 months. 6 months of reserves is probably what I would have before I made the switch to a S Corp from a disregarded entity. And I would try to time it around the first of the year because it's easier to make that transition in a new tax year.
Yeah.
Right. And start withholding then. What I would try to do is probably work towards that leading into Q4 of the year and then take the fourth quarter to do all your planning and setup and then have it ready to go for Jan 1.
Yeah.
Every year. Those kind of changes are best made then. And another cool thing is Once you get to an S corp and you're an employee of your S corp, you can then contribute to a 401k as opposed to a SEP, which is not quite as much money, but there's less restriction and it's easier to set up. SEP's fun, man. I learned that lesson very early in my career. A lot of my wealth I can attribute to. So think about this. I got into real estate in January of 2008, December of 2007. Well, what happened later in 2008? The Dow crashed, right? It went from 13 to 7. Okay. Think about 7. We're at what, 44 now? And I maxed a SEP every year, okay, from 2009 to probably 2015 on the way up after the Dow had crashed. So like there's money that I contributed in 2008 at a basis of 8,000, the Dow at 8,000, that's now
over 400%.
Yeah. Over 400% growth.
Yeah.
You see what I'm saying? Just in today's value, I mean, think about the compounding effect of it riding the wave up.
Mm-hmm.
I mean, it's pretty awesome.
Yeah, it is.
Timing. A lot of people are champions of timing.
Sure.
I was very, very fortunate.
Yep. Right now it's pretty freaking high, even though it's
yeah. I mean
down.
the fundamentals are not. It's down, and the fundamentals. Who knows? Yeah, 42,645.
And I'll tell you, man, I would be a little weary about putting that into a SEP right now, just because the stock market is high. But you know why I'm not? It's because I've owned Bitcoin for so long too. Well, taxes, yes, but I've owned Bitcoin for so long, and like I'm already in the mindset of put it there, don't think about it.
That's it.
You'll see it in 30 years.
That's exactly where I'm at. I made the decision in probably 2008 or 9 where I was like, okay, I'm going to be in a 35, 38, 42% tax bracket. I'm saving 42% on every dollar that I invest pre-tax. I am going to absolutely annihilate pre-tax savings.
Financial advisors I feel like they're getting a bad rap sometimes, but my suggestion, use one. It's easier for you. It's what they're good at, and it's a lot harder for you to want to pull money out early. Like, just use an accountant, use a financial advisor, use a lawyer.
Yeah.
It's going to make your life a lot easier, especially if you're in the circumstance of making a few $100,000s a year.
Yeah.
You don't want to spend time on all that. It's going to stress you out. Just know it's in good hands and you don't have to think about it.
Okay, so I never want to hear a realtor, lament the fact that people want to sell their house by owner if they file their own taxes and they invest their own money in the stock market or in mutual funds. Like, I don't want to hear it. You're not a specialist. How can you look a seller in the eye and tell them that they should spend the amount that they're going to spend on your services when you won't do the same? Not to mention the fact that your CPA, your attorney, your financial advisor are probably 3 of your best referral opportunities. Mm-hmm. And if you network with the right people, they will support your business. They will generate more revenue for you in commission dollars than they will cost you for their services. And some of them, like the ones that I work with, have nearly made me a fortune over the years. Also, one piece of advice on financial providers: get a CFP, get a certified financial planner, not just a financial planner. There's a difference. And part of the reason why you use a CFP is they make a percentage on the growth of your portfolio, which means they make more. You might find somebody that charges flat fees that will charge you substantially less, that seems substantially less, especially when you're starting out, but they are not incentivized to help you succeed. They're incentivized to transact. And oftentimes, transacting is not the best thing for you. You don't need to be moving in and out of different positions, different funds. You want your money to stay and take advantage of the law of big numbers and the inertia that comes with compounding. So like, yeah, the more I make, the more they make, right? Yeah. Okay. You could look at it as a zero sum and say that that's money that's not in my pocket anymore. Or you could look at it as they may not have made me as much if they didn't have something at stake. Not to mention better people that are better at what they do make more money doing it.
Yeah.
You want to be allied with good people. Good certified financial planners have wealthy clients that buy expensive real estate investments. Do you want access to those type of referrals? Anyway, I don't know. I'm getting on a soapbox a little bit, but I think you definitely get you a certified financial planner. Good attorney, good CPA, essential.